Welcome to the Galvin Group Real Estate Investment Club, where you can build wealth through real estate without having to do any of the work. We're a private investment club powered by fractional, co-investing, and cash-flowing assets. If we haven't already met, hi, I'm Cooper Galvin. I'm the club organizer and the handsome gentleman pictured on the far left side of your screen. I have a degree from Norwich University in construction management and engineering science. I'm a sergeant in the United States Army, and I will be the hands-on operator for this club. The man standing next to me in that picture would be none other than my father, Michael Galvin. He has over 25 years of experience in construction management and renovations. He owns his own current real estate portfolio, and he has management experience in hotels, condominiums, and apartment complexes. We're both based in Florida, so we have local market knowledge and established relationships here. We have investing experience in single-family, multifamily, and condo conversions, and we're Sub-2 Owners Club members, so we can source deals creatively through large networks. Our club's mission is to gain equity in diverse, cash-flowing portfolios that are typically out of the reach of individual investors. The way it works is members can pool capital through a shared LLC managed by fractional, and then vote on deal approval. The investment club's current buy box is single and multifamily residential, long-term buy and hold in the southeast United States. Our target cap rate is over 8%, and our target NOI is $300,000 plus. The first opportunity I'd like to present before the club goes private is a portfolio in Panama City. It's made up of 7 single-family homes, 3 duplexes, 2 triplexes, and 2 residential lots of land that are prepared to develop. That's a total of 14 properties, 19 doors. At an estimated market value of just over $4 million, this deal surpasses our target cap rate and NOI and can be secured with less than 12% loan-to-value. Why is Panama City a place that I'd want to invest in? Florida in general is extremely attractive for investment, considering it is one of the fastest growing states in the U.S., and billions of dollars in infrastructure and investment has been put into Panama City in the recent years. Rental demand is always high due to a growing workforce and year-round tourism. With Gulf Coast popularity being at an all-time high, Bay County home values continue to appreciate. Economic drivers for the area include military installations like the Tyndall Air Force Base, Panama City Hospital, and other medical centers, and year-round tourism with things like snowbirds, spring breakers, and consistent concerts. With limited affordable housing being an issue across the entire country, this is an outstanding opportunity to keep high occupancy rates through well-maintained rental stock. The way in which we found this deal is a testament to the Sub-2 community itself, proving it's truly not what you know, but rather who you know. A bird dog from California originally found this lead and brought it to a wholesaler that he knew in Florida. Cameron Gallman was that wholesaler. Cameron and I met at the Creative Nation Tour in Tampa, Florida, where he told me that the seller that he had just spoken with had ALS and wanted to leave money to his children rather than investment properties. Over the next couple of months, Cameron and I negotiated with the seller to come to the best possible terms for both parties. The terms on this deal started with us establishing a market value of the portfolio. After walking the properties, speaking with the property manager, and doing comps of our own, we decided that the property was roughly worth $4.2 million. Cameron and I negotiated about $700,000 off that price to a total of $3.47 million. Due to the seller's situation, we ended up splitting the portfolio into 2 contracts. The seller wanted to do a 1031 exchange for tax benefit reasons, and in order to do that, he needed at least $1 million down. So the first contract is a DSCR loan with his 2 nicest properties that get us to that $1 million threshold. The second contract takes the remaining $2.37 million and seller finances it at just $50,000 down. The seller financing is 4% interest only for 5 years with a balloon payment at the end of 5, which we intend to refi to pay. There is an extension clause written in as a sort of safety net. All of these properties are turnkey, so they would cash flow immediately upon closing. At the bottom right of your screen, you can see the table that we've labeled War Chest. This is a sort of rainy day fund. That's money that we intend to save to prepare ourselves for unforeseen circumstances causing increased vacancy rates. The property management is going to be done by the same person who's been doing the property management on them for the last 17 years. He knows the ins and outs of the entire city. Because he's worked with these properties for so long, we're getting a rate that we could get nowhere else. Our monthly rental income is going to be about $30,000, and once you subtract PITI and our war chest from that, our cash flow is looking at right around $6,000. Next week, I will personally be on site with a home inspector and the property manager to make sure that I know exactly what I'm buying and you know exactly what you're investing in. All the heavy lifting has been done, and all that's left is to partner with a few lucky investors to get us to our final goal of $500,000. Here's what an investment in this deal could look like for you over the next 5 years. With a minimum investment of $10,000, you'll receive 1% equity in the portfolio, $700 a year cash-on-cash return, and over $20,000 in your 5-year total return. That's more than doubling your money, which is better than the stock market averages. Not to mention, you'd be an equity partner, so you can take advantage of real estate tax benefits. I don't know about you, but I love nothing more than giving the government less of my money. Plus, it's a real physical asset on American soil, so you know it won't disappear overnight like something in the stock market may because of a mean tweet or something that happened 5,000 miles away. As an added bonus for this deal, our top investors will be given first dibs on all future opportunities. If you like the sound of doubling your money and want to take advantage of tax benefits, but want to do more than the 3 values pictured below, we will take partners all the way up to the full $500,000. Keep in mind, the more you invest, the more equity and returns you gain and the more you can write off on your taxes. If you're not in a position to invest but know somebody who may be, I'm willing to give a 1-point return for any and all referrals. Some common questions might be things like, what if the market value decreases? The investment club will own up to 50% of the portfolio, and at 12% loan to value, that is a deep equity buffer. What if there's high vacancy rates? In a growing area of a growing state with historically low vacancy rates and high tourism draw, there should be no issue with this. But for sake of argument, there are multiple exit strategies that we could deploy to this diverse portfolio. Things such as co-living, BRRRR strategy, Airbnb, midterm rental, value add and sell, lease option. I could continue. What if you end up not having enough money for renovations? There are no renovations. It's a turnkey portfolio, already stabilized, already with tenants. But what about some kind of unforeseen expense? First, we have our war chest, which we take money out of monthly from our cash flow that allows us to prepare for that kind of thing. Second, insurance. What if there's zoning or permitting issues? There won't be, because all of the properties are turnkey and cash flowing, and all of your returns are based solely on equity and cash flow, not projected value add. Cooper, are you sure you want to stay with the current property manager? Yes, he's allowed this property to cash flow for the seller for the last 17 years and has put significant sweat equity into it, so he wants to watch it succeed. That's the reason he's giving us a lower rate than what we could get out of a normal management company. Plus, he's going to know a lot more about the properties than a management company coming in fresh would know. What's the plan after the 5-year term is up? The current plan is to refinance, retain ownership of all properties, and allow them to continue to cash flow. But like I said earlier, there's multiple exit strategies. If it came down to it, we could sell one, multiple, or all properties to make sure this portfolio makes us as much money as possible. If this is the kind of deal you're interested in, reach out to me at the phone number and email listed below, and we'll get you all set up and ready to go on Fractional.